Well, we just wrapped up a very volatile month for global share markets, but ultimately the US market gained 1.4%, while the Aussie market did slightly better, lifting by 1.8%, posting a second straight monthly gain. During the month, the US market climbed to fresh all-time highs, while the Aussie market got within striking distance, just 1.5% away at its best levels. Now, there was a lot going on, from geopolitical uncertainties, concerns about the US Fed's independence, tariff threats, and precious metal prices continuing to soar. In fact, gold climbed by as much as 30% and touched $5,600 per ounce for the first time, while silver jumped 54% to over $120 per ounce, which propelled the materials sector to record highs. But we did see most of those gains reversed in the final session of the month amid renewed geopolitical uncertainty, and after President Trump nominated former Fed Governor Kevin Warsh for Fed chair, and that saw the US dollar climb from its 4-year low and the Aussie dollar pulled back from its 3-year high. On top of that, interest rates remained in focus. We saw increasing bets of an interest rate hike in Australia, which could be the first increase in over 2 years, while the US Federal Reserve kept rates on hold in January, with the potential for 2 rate cuts by the end of this year. As far as Aussie sectors go, resources fared best on the back of those rising precious metal prices, while tech extended losses to a 7th straight month. In terms of stocks in focus, in Australia, BHP reclaimed its position as the most valuable Aussie stock and reached an all-time high. Deep Yellow climbed to a 16-year high amid upbeat uranium prices, and gold miners like West African rode the gold rally wave. On the other end, tech names were away. Location tracking app Life360 actually surged by 28% in a single session during the month after upgrading its full-year profit guidance, but still posted a 4th straight monthly decline. Four-wheel drive accessory maker ARB downgraded its profit guidance, and consumer discretionary names like JB Hi-Fi and Myer were pressured by rate hike bets. Turning our attention to the US, the top traded US stocks by CommSec customers on the international trading platform in January were Nvidia in first place, Tesla in second, and Taiwan Semiconductor in third place. The top 3 performing US stocks in January were all data storage companies, thanks to AI-fueled storage demand, which saw all 3 companies exceed earnings expectations, lifting the entire data storage sector, while financial software firms Intuit and ServiceNow both hit their lowest level in over 2 years amid a slump in software stocks, as investors worry that free and low-cost AI tools could disrupt the sector. Health insurance Humana also slid to its lowest level since 2017 after the US government proposed only a slight rise in Medicare Advantage payments to insurers, missing a forecast for 4 to 5% lift. Looking ahead from here, at the time of recording, the Reserve Bank is yet to make its February interest rate decision. There's roughly a 70% chance that the RBA will raise rates for the first time in over 2 years after hotter than expected jobs and inflation data. February is also the start of Aussie reporting season for mostly half-year results. Now, this is a very important time for Aussie investors, and analysts are predicting a volatile season with more significant share price moves. For more on what to expect this reporting season, check out our reporting season preview on our website or our YouTube channel. And finally, as usual, Nvidia is reporting about a month later than the other Magnificent 7 stocks, set to release its results on the 25th of February. So being the largest company on the US market, keep an eye out for those results.